Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back, guys. Let's go over the charts and see what has changed. But before we jump into the analysis, I want to take a minute to talk about something important for the community. I've decided to make an update to how I want to build this group. The goal is simple. I want to make the learning process as transparent, practical, and useful as possible, without charging the kind of prices we often see in other trading groups. Because let's be honest, in many groups you pay a lot of money, but in the end you're still left guessing. Did they actually take the trade? Where was the entry? How was it managed? Was it planned before the move or only shown afterwards? I want to do the exact opposite. When I take a trade, I call it live. I also explain the idea behind it, the planning, the execution, the management, the take profits, the invalidation, and even the mistakes when they happen, because that's where the real learning happens. Not by looking at a chart after everything is over, but by understanding the decision-making process in real time. You can watch videos, read books, or listen to someone explain a setup, but real progress comes from practice, reviewing your trades, journaling, collecting data, and slowly understanding why something works. That's why I don't just share signals. I share the complete process, the wins, the losses, the management, and the reasoning behind every decision. Not so people can blindly copy trades, but so they can actually learn how everything connects and eventually build confidence to trade on their own. At the same time, I want to make the group more affordable. The idea is simple. The more serious people join, the cheaper it becomes for everyone. Trading is already difficult enough. Losses are part of the journey. Mistakes are part of the journey. I don't want the subscription itself to become another obstacle. So instead of increasing the price as the community grows, I want to do the opposite. As more serious members join, everyone benefits. The first goal is 50 members. Once we reach that, the subscription will be reduced to $30. If we reach 100 members, it will be reduced even further to 25 euros. Around that point, I will most likely close the group for new members. The reason is simple. I don't want a huge community. I prefer a smaller group of serious traders who actually want to learn, ask questions, practice, journal, improve, and grow together over time. This isn't meant to be a place where people join for 1 month, collect a few signals, and disappear. It's meant to be a place for people who genuinely want to become better traders. Inside the community, we trade several different strategies, including systems that I've developed myself, tested, and continue improving. Some setups are beginner-friendly, others are more advanced. But whether you're completely new or already have experience, I believe you'll find ideas that can improve your current trading. You can use them on their own or combine them with the strategy you already trade. Execution comes first here. Not screenshots after the move, not hindsight, real execution. That's the standard I want for this community. So what do you need to do? Simply click the Google form in the description and fill it out. That puts you on the waiting list. Once we have enough people, I'll announce it and send an email to everyone who signed up. I'll probably mention this a few more times over the next couple of weeks, but once we've reached the goal and the community is closed, you won't hear me talking about it anymore. So if you're seriously interested in learning with us, you're very welcome to join the waiting list. Now, with that said, let's switch over to the charts. I will go quickly over the charts we've been looking at for quite some time now. As you know, they are often just repeating, which is also one of the reasons why I don't want to make too many videos just to keep you busy, the way 95% of content creators do. In the end, you watch hours of content, but you still don't really know what to do. I'd rather keep the information useful and only make updates when something actually changes, instead of commenting on every small move where more often than not, you just end up losing money by overtrading. With that said, let's start with our first chart. These are the historical bottom areas, the production cost, the power law level, and below them the lowest level, which represents the worst-case scenario and is also slowly but surely rising over time. Together, These areas have historically marked the bottom, while Bitcoin was usually correcting around 80%. This cycle is different. Price only corrected around 50% while already reaching these levels. So based on history, I had to make a decision. Do I stick to the idea that Bitcoin still needs an 80% retracement, or do I trust the historical levels themselves? For me, the answer is the levels. Only if they break would I admit that I'm wrong and that price is likely heading toward a deeper retracement. Until then, this remains my bottom area and my main support. We were already here a few months ago when I started buying Bitcoin and talking about a potential bottom. Now we are back in exactly the same area. Of course, a deviation can always happen. We can always get another wick lower. But overall, based on the information I currently have, this remains the bottom area. The only thing it needs is time. Bottoms usually don't form in a single candle. They are a process. If you go back to my older videos, you'll see that I already showed this scenario where the market simply spends time building a bottom. So there really isn't much more to add. Either this is the bottom area, or I'm wrong and price breaks lower, giving me the opportunity to buy Bitcoin even cheaper. But for me, this is the area where action is required. Well, it already was when I bought the first time down here. From here, I would like to see the range continue and price spend more time inside it while we move through the 4-year cycle time window. That brings us to the next chart. This is an older chart where I measured all the major cycle relationships, tops to bottoms, bottoms to tops, halving to top, halving to halving, and several other important cycle measurements. So let's take a quick look at that overview. So what you see here are the different cycle measurements: low to low, top to top, halving to top, and several others. It looks more complicated than it actually is. The main thing we are looking at right now is the bottom timing window, which we are slowly but surely approaching, while price is also hitting the historical levels that have previously marked bottom formations. Of course, there are still a few months to go, but if we do not see a major breakdown from here, then this is the area where I would expect Bitcoin to spend time ranging and building its bottom. For the next cycle, I currently see a couple of possible scenarios. The first one is that the market behaves similarly to previous cycles. That would mean price gradually rises into the next halving and then makes the final push into a new all-time high before the whole process repeats again. The second scenario is that this cycle develops much faster. That would surprise a lot of people because they expect the top to come much later. But if price really starts accelerating from here, then I think the cycle top could arrive much earlier, followed by a much longer period of sideways movement or retracement. Again, that would surprise many people. The important thing to remember is that the cycle itself is measured from low to low. The exact timing of the top can vary. It is not a hard rule that Bitcoin has to peak exactly 47 months after the previous bottom, just because that happened in the last 2 cycles. If you look further back, you previous cycles where the timing was different. One cycle took around 49 months from top to top, another only around 29 months. So what happened during the last couple of cycles should not automatically be treated as an unbreakable rule, even though many people do exactly that. We will simply observe the market together and see which scenario develops. By the way, I have been using this chart for quite a long time. As an example, before the last halving, I had already marked out the projected dates for the next breakout, which happened around November, and also the expected timing for the top. Personally, I ended up round-tripping that top, even though all of my tools were warning me about it. That is part of trading as well. For now, however, we are slowly approaching what I consider the bottom area of this cycle from a timing perspective. Price-wise, in the best-case scenario, we have already reached it, and now we simply spend time moving sideways inside this larger range. If that changes, we will update the analysis and adapt. But based on the information I currently have, this remains the bottom area for me. Now let's switch over to the next chart. Here we have the major support and resistance level from the previous bull market. There really isn't much to add here. It's a significant higher timeframe support level, and as long as it continues to hold, I will treat it as support. Only if this level breaks would I start looking for lower levels. Even then, I would most likely expect some kind of capitulation wick rather than an immediate continuation lower. But until that actually happens, nothing changes. For me, this remains support, and I continue to treat it that way. Next, the yearly fib time. Price is getting closer to the next yearly fib time window. If price spends time here and reaches that timing while sitting on support, that's where I want to see a reaction and, ideally, a reversal. That means we need to wait a bit longer until next month. Then, just like with all the previous fib time windows, we'll look for a reversal. One thing to keep in mind is that price could also spend more time going sideways or even moving lower into that time window, stretching the move into the next fib time, which is closer to the 4-year cycle low around October. Of course, there are other scenarios. What if price forms a channel to the downside? Sure, that can happen. But I'm not aiming for that right now, because first of all, we're still in a range, and there isn't much to add. Here we simply have a range chart. This is now the range together with the FOMC statistics. Here we were looking for either a higher low, or if that higher low failed, an SFP. That's exactly what happened. First, we had the move up, which we traded. Then we had the move down, which we also traded. After that, I tried to catch the higher low, but that attempt failed. The next step was to look for an SFP, which we got yesterday, and that trade is already a safe winner. Now I've removed all the noise, and you can see the simple range that I'm looking at now. This was our previous range, and we saw the breakout from it. At the same time, Bitcoin had already reached the historical bottom area from a price perspective. Now price simply needs to spend enough time there so that not only the price aligns with the bottom, but the timing as well. And how is it doing that? By going sideways. So for me, unless this range breaks down, it is simply a range. There is no need to overcomplicate it. Right now, price is back at the range lows. Unless we get some ugly price action like a choppy breakdown, an impulsive break lower, or another clearly bearish scenario, my main focus remains the range. Yes, SFPs are possible. Yes, deviations outside the range are possible. And yes, both are completely fine. But I only become bearish on a real breakdown. Until then, we trade the range because the bias is still the range, even if it has become a much larger one. The higher time frame bias remains that Bitcoin is forming a bear market bottom around these historical levels. On the lower time frames, the bias is simply this range. And on the even lower time frames, the bias was bullish because we were trying to catch the longs. Simple as that. So for now, price is back at the range lows, and we continue catching the longs step by step, letting the runners target the range highs again. If we see another move outside the range, then we'll reassess the situation, just like we did when price broke above the previous range. For now, I think that's all we need to know. Overall, price has already reached the historical bottom area. Now the timing simply needs to catch up. Locally, price remains inside the larger range, and unless something changes, like a confirmed break, we continue trading the range. That's exactly what we did before. We traded the upper part of the range, and once price broke above it, we started targeting higher levels. Later, we took a short, and the previous range high acted as support. Once that support was lost, we simply traded back into the range. Now let's move to the lower timeframes and check the structure, which, as far as I can see, hasn't really changed since the last video. On the higher timeframes, all of the main structure swing highs are now based on this move down. Since price made a new low, all of the major structure highs have shifted lower, including the monthly one. That means if you want to keep the structure bearish, you would like to see a move higher, a rejection, and then another lower high followed by new lows. Once the monthly swing high around 82K is broken, the monthly structure shifts back to bullish. On the weekly time frame, we still need a weekly close to confirm it. If the weekly closes like this, then the weekly structure has also shifted lower. That means, to keep the weekly bearish, you would like to see a rejection from these levels, followed by lower highs and lower lows. However, if we break above that weekly swing high, it would be the first weekly structure break to the upside in a long time. From there, I would aim for the range highs and potentially even higher. So, the 67-68K area has become very important. It will either hold as resistance and keep the weekly structure bearish, or price will break above it and flip the weekly structure bullish for the first time since the move down from the all-time high. On the daily time frame, we have the same situation. I just need to adjust the structure levels, but with the new low, the structure has now shifted lower. To keep it bearish, you want to see lower highs followed by lower lows. If price breaks above the swing high, then that becomes a bullish structure break. Personally, I would simply like to see this range continue for a while and then eventually break out. But if something changes, I will adapt and update my next actions. For now, I took another long yesterday. I'm still holding some of my other longs. And I'm simply trading the plan. We marked this scenario out in the last video, so for now it is playing out as expected. Yes, I had a failed long attempt, but that's completely fine. Not every trade is going to be perfect. A lot of people only show perfect analysis and perfect outcomes. I can almost guarantee that many of them aren't actually trading. They're just feeding you technical analysis after the fact. That's exactly what I don't want. Technical analysis without execution is incomplete. We need the execution behind the analysis. Otherwise, it's just watching someone draw lines on a chart. We don't get paid for being good at charting. At some point, becoming good at technical analysis is almost inevitable if you put in enough time. Execution, however, is where most traders struggle. That's why I think it's so valuable to watch someone actually trade the system they teach and call the trades live when they take them, because that's where the real learning process begins. Without execution, it's like owning the best car in the world, but never learning how to drive, not even a bicycle. So to summarize, the higher time frame view remains the same. Price has once again reached the historical bottom area. The only thing still missing is time. That has always been the main theme. Price doesn't need to make a significant new low. It can simply continue moving sideways, which is exactly what we are seeing for now, unless that idea gets invalidated. If we break down from this range, then we simply adjust and aim for the next major support areas below as part of a larger deviation. Until then, I continue looking for trades inside this range. The latest one was the SFP of the lows. If I get another setup or trigger, I'll look to add to the position, and as always, I'll share it first in Telegram, because that's the fastest way to keep everyone updated. Now, let's take a quick look at the local levels, today's averages. By the way, yesterday's SFP had another nice confluence with the daily maximum average move, which is a level that doesn't get hit very often. But when it does, especially together with other confluences, I think it's definitely a trade worth taking. For now, I've already taken TP3 and have around 35% of the position still running. I'll see if I add to it later, or if we don't get a meaningful retracement, I'll simply let that remaining position run toward the 66K target. Now back to today's levels. Today's average loss sits right around the support area. That means I'm not expecting a new low unless volatility starts increasing significantly. In the ideal scenario, I would like to see either a higher low or an SFP of the low, but only if I get a proper trigger or enough confluence. Otherwise, I'll simply wait. The average gain for today is sitting around the resistance area. Right now, it's still resistance. If that level gets reclaimed, it becomes support. You can also see that my last long attempt came from this level. Once it broke, price moved down to the next support, so the level itself worked well. It was also one of the reasons why I decided to take some profits there. Yes, there are lower levels as well, but as always, I prefer to go step by step. That's what consistently makes money. So I'll look for another trade if we get an SFP of the low, and maybe even on a higher low as well. But first, I would like to see a stronger bounce. The important thing is that I still need a trigger. That's why I can't tell you right now whether I'll enter another trade or not. I update those in real time because I need confirmation first. A trigger or additional confluence can form later. For now, locally, I don't have anything, and I'm not planning to add to the position yet. If a few more days pass and a setup appears, then I'll look to add, and I'll update that in Telegram or Discord. Telegram usually includes much more context and a deeper explanation of the setup, so you can actually learn along the way. Personally, I think that's much more valuable than giving you dozens of scenarios that I don't even trade myself. You deserve something better than that, and that's exactly what I'm trying to provide. With that said, This was a quick update. Make sure to join the waiting list, and hopefully we'll spend a lot of great time learning together. I wish you a great day, and I'll see you in the next one.